Chinese property stocks surge as major cities ease home buying restrictions. Oil prices rise as the Middle East conflict intensifies. And Argentina's economic reforms spark rising poverty and unemployment. Hello, I'm Taiba Aydin with the latest business and finance news here on TRT World. Shares of Chinese property developers rallied on Monday as major cities unveiled easing measures to encourage home buyers. The Seng Mainland Properties Index climbed 8.36%, extending last week's gains of more than 30%, while Mainland China's CSI 300 surged 6% after the index logged its best week in almost 16 years on Friday, with the CSI 300 real estate index jumping over 7%. The Guangdong government removed all restrictions on home purchases effective on Monday. Previously, migrant families were required to pay taxes or social insurance for at least 6 months in order to purchase up to 2 homes, while single individuals were limited to 1 apartment. The Shanghai government also lowered the required tax-paying period from 3 years to 1. The city also lowered the down payment ratio for first homes to around 15%, while second homes to about 25%, above the nation's average ratio of 15%. The rules take effect starting Tuesday, according to a notice late Sunday. And Shenzhen's government relaxed purchasing restrictions, which had capped local families to 2 homes and single individuals to 1, allowing buyers to purchase 1 more apartment in certain districts. Migrant families with at least 2 children were restricted to buying 1 house. Now they can buy 2. The easing measures follow the central government's call last week to combat the property slump. Let's get more on this now with Russ Mould. He's investment director at AJ Bell. Good to see you, Russ. Now, China's property sector has been suffering for some time now. How will these measures help developers in their recovery?
Yeah, I mean, the stock market, as you say, clearly thinks that they are very helpful given the warm reception the stimulus package has received, with the CSI 300 index up by nearly 1/5 in just a week. There's a big overhang of property that needs to be cleared, so anything that can stimulate demand and help affordability will be seen as good things. But it is part of a wider program for China to try and reinvigorate its growth. It's struggling to meet its 5% GDP growth target. And if anything, while helping out the property sector is important to clear up the mess there, China actually needs to move away from a growth model that's based on property, commercial real estate, infrastructure and exports. Because exports are under pressure from tariffs, real estate there's been a bust, and it really needs to start stimulating private consumption. So that's probably going to be the major focus of a long-term program for economic growth.
So on a broader scale, recent support measures from the People's Bank of China has helped stocks rise to their highest level in 16 years. But some analysts seem to be skeptical over how effective they'd be in shoring up the economy. Do you agree with that?
I think this is by no means the final step. I think it's the first step in what will be a range of programs. As the analysts correctly say, there's been a major real estate bust, domestic and commercial, and that will take a long time to clear. But there are other reforms in the pipeline already. The 3rd plenum meeting of the Communist Party in July looked at reforming land and the hukou, whereby it will now be much easier for people to move their families from the east to the west. Because at the moment, any welfare payments you receive are based on the city of your birth, not the city where you work. So when people move to a new city, they save more to give themselves a bigger buffer. So if that system is reformed, they may need to save less, be able to spend more, and also move their families, again, creating more mobility and potentially more demand for property in some of those cities where at the moment there's too much supply. So land reform, another major change as part of a wider economic program.
All right, Russ Mould, investment director at AJ Bell. We will have to leave it there, but thank you very much for your analysis.
Thank you.
Now a quick look at some of the other top business stories from around the world. While properties are doing well, China's factory activity is not, contracting for a 5th straight month in September. The Manufacturing Purchasing Managers Index was up 49.8, higher than August's 49.1, but still below the 50 mark, separating growth from contraction. Analysts say declining demand and a weakening labour market is playing a role in the slowing down of the manufacturing sector. In Japan, factory output fell 3.3% month-on-month in August due to typhoon-led disruptions in motor vehicle production, and there has been a drop in demand from the US. Japanese authorities are bracing for a less than optimistic economic outlook and fear further decreases in factory production. The UK's last coal-fired power station is set to close on Monday. The Ratcliffe-on-Soar station has been generating energy since 1967. It's part of a government plan to shut all coal plants by 2025. The closure is seen as an important step toward reducing carbon emissions. Authorities plan to build a clean energy park at the site. And US President Joe Biden says he won't interfere in the dock workers' labour dispute over wage increases and concerns about job losses due to automation. The union, representing 85,000 dock workers, plans to strike if no contract is reached by Tuesday. The strike could shut down 14 major ports along the east and south coasts and impact billions in trade, and also affects the upcoming presidential election. Oil prices extended gains on Monday, driven by mounting concerns over potential supply disruptions. Producers in the Middle East are concerned over Israel's intensified attacks on Iranian-backed groups in the region. Brent crude futures for November delivery have risen 51 cents, or around 0.7%, to $72.49 a barrel. US West Texas Intermediate crude futures added 43 cents, or 0.63%, to $68.61 a barrel. Oil prices surged on Monday amid fears that the conflict in the Middle East could escalate further, potentially involving Iran, a key oil producer and member of OPEC. The rise comes after Israel intensified attacks on Houthi groups and struck central Beirut for the first time in years. Despite Monday's rise, demand concerns persist amid economic instability in key oil importing regions like China. Recent disappointing economic data and limited impact from fiscal stimulus measures have failed to boost confidence in China's oil demand. While excess supply remains a major worry, the OPEC Plus alliance is stepping up its efforts to ensure stricter compliance with oil output cuts. It plans a three-part strategy of production trims to stabilise the oil market. For more, we're joined by Yousuf Al-Shamari, President of London College of Energy Economics. Great to have you on the programme, Yousuf. Now, how are rising tensions between Israel and Iranian-backed forces in the region affecting global oil prices at the moment?
Hello, Taiba, and I'm very pleased to speak to TRT World. Well, definitely there is an impact. And if you look at oil Brent on WTI prices trending this morning, you see there is around by half a cent of or half a dollar of a rise in the trading activity. So we were something like $72 to $71. Now it's close to a $74 for Brent. And that shows you that the recent escalation in the fight between the Hezbollah in Lebanon and Israel, of course, the murder of the Hezbollah leader over the past couple of days, definitely is a worrying sign that the turbulence in the Middle East is rising, and potentially that could involve Iran. And I believe this is one major reason why we're seeing an escalation of prices, because Iran is a major producer in the region.
Right.
On the other hand, just having said that, still there is demand concerns and here also supply issues, and that includes compliance from the OPEC Plus group, including Iraq, Kazakhstan, and Russia, and also Saudi Arabia, and a member of 8 countries are planning to ramp up production starting from December. So that's why we're not seeing a major prices going towards $80, for example, because there is still abundance of supplies and there is demand concern, particularly in China.
And so what impact could Iran's potential involvement in the conflict have on oil supply and market stability? Do you expect it to rise to $80, as you mentioned just now?
Well, I highly don't expect that because the geopolitics in the region, I don't think it will allow for a direct confrontation between Iran and Israel. We've seen that over the past area, actually this year, when everyone remembers that when Iran fired a missile against Israel and vice versa, when Israel murdered the Hamas leader in Iran, and we didn't see any direct confrontation. So I wouldn't expect that we're going to see even this time. But definitely there is a concern and geopolitical risk premium in the market. On the other hand, Iran sells most of its oil to China. So it produces close to 3 million barrels, and it produces almost 2 million barrels exports mainly to China. So definitely this is an important, although this is, by the way, still subject to US sanctions, but it is there in the market and it's priced in and when it comes to global balances. So that's one issue why we which might expect, especially when looking at. But on the other hand, we still have non-compliance, especially from Iraq, from Kazakhstan, from Russia, also Saudi Arabia and other countries are planning to ramp up production. So I wouldn't take any disruptions from Iran here as an issue. There was a recent article published by the Financial Times over the past few days and saying that possibly we're not going to see $100 price within the next few months, or actually this year or so. And that is taking in particular into addition the issue of multiple suppliers. The U.S. currently producing close to 13.3 million barrels, the highest ever. And if this conflict has happened in the 90s or beginning of the 2000s, then no, I wouldn't be surprised if we see crude trading by now more than $100.
All right, interesting analysis there, Yusuf Al-Shamari. We will have to leave it there. Thank you very much for joining us.
No,
In Argentina, students and teachers are taking to the streets against President Javier Milei. He rolled out big budget cuts to the country's university system earlier in the year. Now he's promised to veto a congressional bill that would finance higher education into next year. Michael Fox has the story.
University classrooms are empty. Students and teachers are on strike. Professor Rodrigo Quiroga says budget cuts have paralyzed scientific research in Argentina.
It's a really hard moment. We have colleagues who have already left or are looking to either leave the university or leave the country.
Roughly 80% of Argentina's university students study at free public universities.
This is the Cordoba University. It's the oldest university in Argentina, one of the oldest in Latin America. But students and teachers here say they are concerned for the future.
Javier Milei's goal is to make universities charge a fee. His goal is to make education a business, so that only those who can pay for it can come and take courses.
Javier Milei is a free market economist who was elected last year with the promise of taking radical action to roll back government and control the country's hyperinflation. But Argentina is still weathering hard times. 3 million people have dropped below the poverty line since Milei came to office. Poverty now affects more than half the population, including most teachers.
Our salaries have lost more than 40% of their worth. So this is really impacting our pocketbooks. Everything is so expensive.
This month, Congress passed a public university financing law that could help fix the problem. It would guarantee the university budget into next year and require inflation adjustments for teacher salaries every 2 months. But Milei has promised to veto the bill. He says his priority is still battling inflation.
We are doing everything to stop the inflation. We have done the hard work. Now we have to wait for the results.
For Argentina's public universities, that is unacceptable. Students and teachers plan to shut down the country next Wednesday, with marches in every major city. They say the fate of Argentina's university system hangs in the balance, and the livelihood of the country's teachers. Michael Fox, TRT World, Córdoba, Argentina.
Argentina is facing a severe economic crisis as President Milei's austerity measures aimed at controlling inflation and reducing debt have triggered a sharp rise in poverty. While markets and the IMF welcome the spending cuts, many Argentinians are struggling with unemployment, increased living costs, and diminished public services. The country's economic future hangs in the balance as it grapples with the consequences of these drastic reforms. In the first 6 months of President Milei's austerity measures, poverty has risen to nearly 53%, affecting 3.4 million people. This marks the highest poverty level in Argentina in 20 years, driven by cuts in welfare programs and public spending. Many Argentinians are struggling with inflation still over 230%, despite reduced monthly inflation rates. Milei's administration has slashed pensions, welfare and public works, leading to massive job losses and reduced purchasing power. Energy and transport subsidies have been cut, increasing costs for citizens, while thousands of public employees have been laid off. Public backlash is growing, with concerns over unemployment and poverty overtaking inflation fears. While the austerity measures have been cheered by investors and the IMF, the population is facing the harsh consequences. Monthly inflation has dropped from 26% to 4%, but the economic pain remains high as Argentina battles a $43 billion debt. Job losses and poverty have sparked desperation among citizens, with some working multiple jobs just to survive. Let's discuss this further with Latin America analyst Javier Farge, who joins us now from London. Good to have you back on the programme, Javier. Now, how have President Milei's austerity measures contributed to Argentina's rising poverty rate?
One of the first measures that Milei took when he took office in December, this happened in January, is that he devalued the peso, which means that salaries lost value. That was the very first measure that he took. Second, as you reported earlier, there was a suspension in public works, excuse me, which means that there was more unemployment. But also, as you said, consumption went down because of a loss of the purchase power of the population. That has increased inflation. Now, inflation went up a bit in August, which is bad news for Milei, because Milei has made the reduction of inflation the big issue, the flagship of his policies. It went up by 0.2%, which is not a lot, this being a big reduction of inflation. But when you're talking about the interannual increase, that means that the relation between the prices of the basic products in August this year compared to the same month last year has gone up by 236%. But also, we have to understand that there's a different kinds of inflation. For example, the inflation in terms of basic services, water, food, etc., has gone out by, I'll give you the latest figure, 7%, education 6%, transport 5.1%, due partly as a suspension of the subsidies for transport. So if you have a family with 2 children, you have to go to work, you have to send them to school, you have to feed them, the purchase power that you had to buy the basic things that you need to feed your family have gone down. Now, there's something called the canasta básica total, the total basic basket. That is a basket of produce that you actually need, basic things that you need in order to maintain, to keep your family. That has gone up by 4%. That means that if you cannot afford the 4% increase, you become destitute, which is a lower level than normal poverty. So all these elements have actually contributed to an increase of poverty, which is around 52 to 53% at the moment. And of course, now many people depend, because of the loss of the purchase power of population and the reduction of consumption, many people who work in the retail sector have lost their jobs, and therefore they have to rely on informal employment. So it's a domino effect of all the measures that he has actually taken, which has increased the levels of poverty, especially among children. Many millions of children are now sort of destitute.
Now, can Argentina find a balance between controlling inflation and preventing widespread poverty and unemployment?
It is possible. At the beginning of his mandate, Mr. Milei the government tried to negotiate with supermarkets a reduction of prices to be able to control inflation. The supermarkets could not afford that because it depends very much on the cost of production and the countryside for agricultural produce that enable them to get supplies of food, for example. The cost of production will have to go down, so prices can go down in supermarkets. That's the first thing. Second, he would have to stop the value in the dollar. The value of the salaries will have to go up, so the purchase power of the population can actually go up. But also, he's going to have to restore some social projects which would enable people, poor people, to have access to food and housing. So all these measures come in. The IMF is very happy with the measures he's taking. They have just approved an $800 million loan because the IMF never cares very much about the levels of poverty. They're very much concerned about austerity. So he can actually do that if inflation goes down, if the basket of basic produce goes down in terms of a reduction of prices of fuel, reduction of prices of food, reduction of prices of transport, and that would help. But he would have to find a balance, and the balance means that he has to reduce some of it. On the other hand, this is extremely important. Inflation has been caused partly by an increase of the blue dollar. The blue dollar is the dollar which is traded in the informal market, but some people would call it black market. The government was issuing dollars, dropping dollars into the market to reduce the exchange rate of the blue dollar, but they have to stop doing that because they need the money to pay their debt to the IMF. He would have to increase a supply of dollars in the market to be able to lower the price of the parallel dollar in the market, and that would help fight inflation. Those are measures that some people believe he will have to take in order to reduce poverty and continue fighting inflation at the same time.
Okay, Javier Farjo, we will have to leave it there. Thank you very much for your analysis.
My pleasure.
Britain's economy has grown less than initially thought in the second quarter, suggesting the recovery from recession is losing steam. Gross domestic products expanded by 0.5% in the April to June period, compared with a previous estimate of 0.6%. The figure also follows growth of 0.7% in the first 3 months of the year. The downgrade has dealt a fresh blow to the Labour government just 1 month before its maiden budget. Prime Minister Keir Starmer has previously pledged to get Britain back to its 2.5% growth pace of the early 2000s. Decades after the Chernobyl disaster caused the shutdown of Yugoslavia's nuclear program, Serbia is once again considering nuclear power. The nation is grappling with pollution and a looming EU deadline to phase out coal. Abdul Wahab Ayubi has more.
Tucked away in Belgrade suburbs, the Vinča facility feels frozen in time. On the pulse of Yugoslavia's nuclear research, its outdated dials and emergency systems now stand as a relic of bygone era. But as Serbia struggles an energy crisis, the government is now revisiting the nuclear option. Nearly 70% of Serbia's electricity comes from coal, which due to pollution claimed an estimated 15,000 lives in 2023 alone. Faced with a 2050 deadline to phase out coal, officials want a return to nuclear energy. Communist Yugoslavia banned construction of nuclear power plants in 1989 after the Chernobyl disaster.
If Serbia were to hypothetically lift a moratorium today and create the legal prerequisites to begin the construction of a nuclear power plant, based on the experiences of other countries and the time required for such construction, it would take 15 to 20 years from today.
Public opinion remains divided, with many concerned about nuclear waste and safety.
It is a painful transformation that Serbia will have to undergo, but at this moment, technological development globally is not at a level where this type of energy source can easily be replaced without nuclear energy.
For Serbia, the crossroads is clear: cleaner energy or the cost of continuing with coal. As Serbia weighs up its options, the decommissioned reactor at Vinča is a stark reminder of the country's nuclear past. Abdul Wahab Ayubi, TRT World.
Well, that's all your business news for now. Thanks for watching.